Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for July 23rd, 2023. As you may notice, I'm not wiping the sweat off my forehead this week. Our AC unit that powers the one into my office was fixed. Only had to deal with that for a day, so thank you for your concern. Hopefully you guys and gals are staying cool if it's a scorcher where you live. I know it's a hot one around a lot of parts of the world. Anyway, we're going to get into the markets, and we've got a lot to talk about this week because this week is probably going to be the most important week of the summer. And I was reading, I believe it was on Forex Live, that said that volatility is supposed to pick up from here, which makes perfect sense. You know, it was slow in July. August is supposed to pick up, although you do have a lot of Europeans on holiday. Maybe that's what's going to increase the volume, is the liquidity dropping, but lots of key events that are coming up. So we're going to talk about all of that and more this week. And I got to start off, and I'm just going to kick it off with let's talk about the dollar index, because the dollar index actually found some support, and I want to give a really big kudos to Ben Maldonado. Ben is somebody who I've brought along and done interviews with on the Trader Summit side. If you haven't checked out the tradersummit.net site, I've done interviews with him here. He's also does interviews with Dale Pinkert all the time on the F.A.C.E show. And he's actually just he's a neat individual, and I enjoy spending time with him. But he sent me a chart. I said picture. It was a chart. Sent me a chart, and he said, "Hey Blake, you know the dollar index completed an ABCD equal leg move," and I was like, "Wait a second, it did?" And lo and behold, it did. And it's, I kind of beat myself up for not even seeing it. But if you have been following my Euro analysis, especially via the F.A.C.E shows every day, you knew that I was looking at an ABCD completion. You could even follow me on Twitter. You don't even have to listen to our daily shows. And I tweeted out that we completed an AB equals CD equal leg move. But that's not the one that he was discussing. It's actually, whoops, I didn't want to do that. He was looking at this. Didn't want to do that. Sorry, I keep grabbing the wrong thing. That's what she said. So anyway, you do an equal leg move here. Let me grab that. And it is actually an equal leg move two different ways, which gave us that big reversal. Anyway, like I said, I wanted to say, hey, good job, Ben, for seeing that, because you know I didn't see it, and I'm glad you saw it. However, I will also point out that we were looking at the 127% extension in the dollar index. Last week, we noted there's a lot of key support and that we should pivot off of these areas. It was 127% extension. I just was worried that we might have, more of a rejection here at the 1.0080, but we're actually above it, and we closed the week above it. And that's got to freak out some dollar shorts right now. But also, one of the other things, if you don't recall this, whether you're talking about the euro or whether you're talking about the dollar index, is the big 618 retracement that we also were on as well. You can see the big 618 retracement there. Dollar index, I know we've talked about this, about the long-term 618 retracement coming into play. You know, you take the very top of this move to the lower end of this move, 618. I think we were within 10 pips of that this week. You know, speaking of which, let me stop for a second and say, this week, in the history of us being Forex Analytics, of offering our prop trading division, the Trader Funding Program, this week on Wednesday, Thursday, I approved the most amount of live accounts. That means people have passed their assessment accounts. You know, they're trading the demo accounts, wanting to trade our capital. I approved the most new accounts of people that had passed the assessment on Wednesday, Thursday, which told me that we had a big amount of people that were actually long dollars, short the euro, short sterling, whatever they were doing. last week. So congratulations to them who did that. And that tells me a couple of things. First of all, people were positioned right in the trader funding program. Now they have the ability to trade our capital. And like I said, I approved more than I've ever done in one day. And it's cool. It's obviously it's cool for us because we get to share in those profits. But more importantly, it tells me that everybody was patiently waiting for the move. And when they saw it, they took advantage of it. So if you want to take advantage of the trader funding program, check it out, because you could either get 75 or 90% of the profits, depending on what you choose at the very beginning. And then you can, deal with our capital. You can learn how to trade our capital. So if you don't have the ability to have a $25,000 account or to have $1 million account, there's a lot of different selections. And then you make your selection, take an assessment, and hopefully this next week, when we have all of these key events that happen this next week, you have the ability to take advantage of that volatility that comes our way. So congratulations to those people. And it's a great way to be involved in the Forex analytics community by doing the trader funding program. Anyway, I just wanted to mention that because we had such a big move in the dollar. And I know that people are now starting to look at the dollar and they're wondering, hey, are we going to get a continued, are we going to see continued dollar strength here? Are we going to continue to see continued dollar strength, euro weakness? Is this it for the euro? And I think a lot of that's going to be, we're going to have a lot of those answers by the end of the week. But let's go through all the key events that are happening. And let me go ahead and get myself off of this camera so you don't have to see me. And we're going to go into the live charts. And let's start with, we have the ECB, we have the FOMC, and we have the BOJ. I want to talk a little bit about the BOJ first and foremost, because this chart in the US dollar Japanese yen is kind of messy. I'm going to tell you, I got caught short on Thursday morning, or Thursday night, Friday morning, playing it as a bear flag pattern. Now, let me explain to you why this is important, why me getting stopped out was also important. It sucked for me getting stopped out of the trade, but that's not the point of this conversation. The point of this conversation is it was important from a positioning standpoint what happened with the BOJ. So, what happened Thursday night or Friday morning? If you're in Europe, you saw the news. I woke up to the move already had happened here in North America. But sources, the sources. Not some individual, just the sources said that the BOJ is probably basically not going to adjust yield curve control this next week, as many people are positioning themselves to. Now, okay, I personally was trading short, and I still have some yen exposure, by the way, but I'm going to talk just about the dollar yen. I had some dollar yen shorts and short exposure because we were trading at basically the 38% retracement. You can see this. Let me get rid of all these other fib levels for now. I don't think we need them on the screen. But we were holding, you can see it right here. We were holding resistance, previous resistance, or previous support or resistance acting as support. That should have been, resistance on the way back up. We had this flag. I thought that would hold. So 38% retracement. I thought that might hold, or around there. As you can see, we kind of overshot it and then came back below it. So, I went to bed, and then of course we got the news article that said the sources, right? Well, that happened. Dollar yen moved up, stalled at the 618 retracement on Friday, and that's it. Now we go into this next week. I actually was talking to a friend of mine the night before I went to the night before I went to bed before that news, and we were talking about the BOJ, and I'm like, look, this central bank has really been stagnant for the last 20 some odd years. They've been dealing with deflation. They have inflationary pressures that are coming, and they're already present right now. They are going to have to make probably have to make an adjustment on monetary policy, and it's going to be a big one. When it happens, what's going to happen longer term? Longer term, you're probably going to see when the BOJ makes some sort of adjustment on on monetary policy, whether it's adjusting yield curve control, then eventually leading to a raise of rates like they did back in 2007, 2008 was the last time, then we're going to see the yen probably start to strengthen over time. We're going to see it start to really strengthen. But if you look at the move that I just drew out with this green line and just a little squiggle, right? Look at the difference. If that squiggle, now just imagine where we're at right here. You can see the price. We're at 132, right? Currently at 142. The squiggle takes us down to 132, roughly. Well, imagine if that happened and the dollar yen was already trading here, down at 138. Now you're talking about a move that went from 138 to 128. That's a big difference, especially when you're talking about the value of the yen, how strong the yen could possibly become in a short period of time. So doesn't it make sense think about this really quick, doesn't it make sense that sources would come out and say the BOJ is not going to do anything this next week, squeezes the market, myself included, squeezes the market, institutions, and then they go ahead and start tweaking yield curve control this week. Why is that a big deal? Because they have now ratcheted the currency pair up or weakened the yen even substantially more ahead of news, which ultimately they know is going to strengthen the yen quite aggressively over the course of the next 6, 12, 18 months. So they put the benchmark higher, so maybe the fall is not as aggressive from levels that we were at a couple of weeks ago to levels that we're at today. And that to me is probably a good game theory for the BOJ. And so why am I telling you all this? Because don't be surprised if the BOJ does tweak yield curve control this week. Now, a lot of economists are not expecting so, and I will go in with a very open mind, because obviously if they do not tweak yield curve control this week, and I know I'm talking a lot about the BOJ, but don't worry, we're going to talk other central banks. If they don't adjust yield curve control this week at all, there's a really good chance the US dollar Japanese yen could be trading up towards 145, 146, 147 by the end of the week, especially with the Fed this week. So I wanted to talk out the BOJ a little bit and the yen and where the yen is at, because I think it's important. Do I think it's going to be important to react to the BOJ on Thursday night, Friday morning if you're in Japan or in Asia or in Australia or New Zealand, anywhere else? Or if you're at the World Cup, right? If you're at the Women's World Cup. It's going to be Friday morning, but it's Thursday night for a lot of us that are going to stay up very late watching the BOJ. But I think it's going to be a reaction time decision, meaning when the news comes out, we will be able to react, and there's probably going to be a lot of upside or downside following the BOJ this week. So, number one on your calendar is the Fed. Number two on your calendar is the BOJ or the ECB, either or. And we're going to talk about the FOMC and the ECB right now. So let me go ahead and take the camera off again, and let's go into other things that are happening this week as well. Actually, before I even really dig deep into currencies, I want to talk about some earnings that are kicking off this week. We have companies like Microsoft, and I'm going to show you how important this chart is. Microsoft that had a failed breakout. Let me say this really slowly for you. A failed breakout at all-time highs. Now, when you get a failed breakout at all-time highs, you have to be really concerned if you own Microsoft. And I think a few funds and a few mutual funds and institutions, and they might own some Microsoft, right? 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 Right. So that's why this is really important. A failure at all-time highs in Microsoft, that's a big deal. They report on Tuesday. Google reports on Tuesday. Or Alphabet. Another rejection and a lower high at the 618 retracement. That has to be concerning. if you're a bull. Okay. Visa also reports on Tuesday. Why is that important? Consumer spending habits. We want to hear what they have to say. I could care less about the earnings. I just want to hear what they have to say. LVMH. Let's see. LVMH. H is. Wait, hold on. What was it? Louis Vuitton. God dang it. What is the symbol? It doesn't really matter. I just want to point out LVMH. You guys will know what it is. They actually report on Tuesday as well. Kind of a big deal because of what happened with the Richemont group this last week. They were down like 10% because of China sales. Remember, this is a high-end. Louis Vuitton's obviously a high-end group that sells not only to China, but the rest of the world. Consumer spending habits are going to be a big deal. All right. Wednesday, we have Meta, or Facebook, for those of us that are older than, those of us that don't really understand what Meta is. Yeah, Facebook. They report actually, and check this out. What a nice channel this has been in. So I think Meta is going to be pretty important, that it holds this channel this week, right? That's going to be on Wednesday. We have Boeing, we have KO, we have on Thursday, we have Amazon. Talk about consumer spending habits. Look at Amazon, really stalling at the 50% retracement of its all-time highs, right? You have Amazon, MasterCard again, like Visa, consumer spending habits. Few important earnings this week. It's going to be a really, really big monster week for earnings. And so I want you just to have that in mind because it's going to matter when we're talking about risk. Okay, a little bit later in the show, we're going to talk about all the different indexes, starting with the S&P. But let's kick it off with, with what's happening in currencies. And like I said, the dollar index was a big deal, especially the reversal and the close back above those key support, well, it's acting as current resistance, the close back above here. That's a big deal, right? Going into this next week. On Monday, before the ECB, which the ECB is on Wednesday, we're going to have Eurozone PMIs, UK PMIs, we have US PMIs, and we have Mexican inflation. So we should be keeping an eye on that. Look at where the euro stalled. Now, this just shows you that the euro's acting a little bit better than the rest of the dollar complex. But the euro really stopped right at the breakout point. So how the euro responds this week to this 111 level is going to be so vitally important. Again, A, B, C, D completion. Let's do that again. A, B, C, D completion, double confluence at the 127% extension, rejecting the weekly 618 retracement. We've come back down to support. There's no easier way for me to put it to you than this week is extremely pivotal for euro bulls and bears. Bulls and bears. Because if you're a bear, you want to see the euro close well above one or well below 111. If you're a bull, you want to see this pivot hold and us rally back towards 112 and change by the end of this next week. It is really pivotal. Like I said, do not mince my words here. The 111 level is key for the euro, both bulls and bears. All right. Also, we have UK PMIs on Monday. Now, we were looking for a dip in the sterling. That's why I drew this last week. We were looking for a dip to 128.50. We actually closed below that. Now, this is the previous 618. This is going to be really careful, key. And you can see last week I drew this little support zone. We're on it. Okay, and you can see the channel support, really critical here. So I bring that up because the sterling, and I've had a lot of discussions with some analysts, some very respectable analysts that I interview this week that are just really worried about the UK because of this stagflationary environment. You have a high inflation and little to no to probably recessive growth. That is stagflation. And that could really weigh on the sterling. So, if we start breaking below channel support here around the 127 level, or you can make it real easy and just look at the 50 DMA. We start breaking below the 50 DMA here, that's going to be a pretty bearish event because it looks like a trap door from the 50 DMA to the 200 DMA, right? And that's not small change. That's 126.60 as it stands right now to 122.60. That's a 400 pip drop between levels. Well, what's 400 pips between friends? Yeah, who cares? All right. So sterling, US PMIs, UK PMIs, Eurozone PMIs. We also have Monday, we have Mexican inflation. The US dollar Mexican peso has staged a big reversal. We're back above 17, which sets up for a false breakdown last week, especially if we can gain some steam. Now, as far as Mexico goes, that's really the key data for the week is Mexican inflation data, but it's also all about risk aversion. If we start to see stocks continue to, pull back a little bit from these levels, the dollar Mexican peso is probably going to continue to rally, and a false breakdown below 17 might allow the currency pair to really extend its legs and probably move back towards 18 over the next few days. Also, one of the other things that we should also keep in mind, at the end of the week on Friday, the BCCH, which is the Banco de Chile, Chilean Central Bank, let's put it that way, right? The CLP. The CLP, forget that. I don't even trade that. I know some institutional guys and gals do, but, more importantly is they are about ready to set in motion their rate cutting campaign. Now, Chile is not Mexico, but it is a LATAM currency and it is a carry currency. So, a lot of people are worried about that Banxico may actually start cutting rates soon, and that's one of the risks to the dollar Mexican peso to the upside. So just keep in mind, the Chilean central bank is at the end of the week, could have a little bit of influence on some of these LATAM currencies and carry currencies as well. All right, continuing on. Tuesday, we have U.S. consumer confidence, but what the most important data on Tuesday is going to be the Australian CPI. Now, one of the risks that I see in the Aussie is, well, there's twofold. If inflation is indeed, or disinflationary data is, coming through not only the U.S. but the rest of the world, then and if Australia is feeling those disinflationary pressures, the Aussie is probably going to come back down under these, this double top will take us down a lot lower. Okay. We're approaching the 200-day moving average, the 50 DMA, but the other risk in Australia is China. Now, China has this big, I forget the name of the meeting. It is, the name of the meeting is the Politburo, I forget, I can't pronounce it. Anyway, they have a big meeting, China, and that could really spur some, what a lot of people have, they're anticipating that that China might put in some more stimulus into their economy. That could have an effect on the Australian dollar. But keep in mind, we have a nice double top that's forming at a 618 retracement. So a key fib level this week. So Tuesday, CPI, well, it's actually Wednesday morning, Tuesday night for me, Wednesday morning if you live in Australia. Wednesday, we have the FOMC. Obviously, the FOMC is a big deal. Everybody's expecting the Fed to raise rates by a quarter point, right? That's like a given. But what we're really going to be looking for is the Fed, or is Chairman Powell, and let me find the dollar index for you. I'm trying to talk and find it at the same time. There it is. Okay. One of the other things that people are going to be focused on is those dot plots, because remember, the market is still pricing in rate cuts into 2024, right? The Fed is, whether the Fed raises rates 25 now and another 25, after the summer, whether it's November or whether it's, whatever meeting it is, that's kind of a given already. But it's what the Fed starts guiding and how the market starts feeling about rate cuts in 2024. Because the market's already pricing that in, I think the risk is that the Fed chairman is still hawkish and the dot plots start to alter a little bit, showing that maybe the Fed governors don't feel that a rate cut is so much appropriate at the end of 2024. And if that is the case, then we're going to get a hawkish FOMC meeting, which means that the dollar will continue to squeeze higher. That is on Wednesday, but that's not the only concern that the dollar has. The other concern is obviously on Thursday, which we have the ECB meeting, which is greatly going to influence what happens in the euro. And because the euro has the huge makeup of the dollar index in the euro, that's going to be a big deal. Now, everybody expects that the ECB is going to be relatively hawkish. They're going to raise rates by 25 basis points. That is all a given. We all know that. Now, we have the Eurozone PMIs earlier in the week, but as far as Wednesday goes, that's what everybody's expecting. Or excuse me, on Thursday, that's what everybody's expecting. Okay, so the question will be, will the ECB continue to lean in a hawkish fashion, knowing that the Eurozone economy is really starting to slow down? It's going to have a risk. It's going to be a risk for not only the euro, but if you're trading boons, that as well. So just keep in mind that the euro could very much influence the dollar index after the FOMC on Thursday. We also in the US on Thursday, we have advanced GDP, durable goods orders. Thursday night or Friday morning, that's when the BOJ happens. And that's when we are really, like I said earlier about the BOJ, this is going to be a reaction time meeting. And I know it's the BOJ is the only central bank that doesn't give us like a set time when they are meeting. A lot of people will make that assumption. It's around 9-10 o'clock at night Eastern time. So you just try to stay in front of the computer and just watch and wait for the headlines. But the reaction, I believe that you're going to be able to trade this reaction with the BOJ, because this is the will they or won't they adjust yield curve control. And by how much, obviously. But whether they do or don't is going to be the where the reaction is going to come in. Either we're going to see the dollar yen trading up at 145, or we're going to see it trading back at like 137. So in other words, the dollar yen could theoretically be trading here or here by Friday morning, by the time we all get up in the morning. And what it does from here will be what the BOJ, if they're taking action finally after all these years, or they're just going to continue to stand aside and let information develop. It's also worth noting that on Thursday night, ahead of the BOJ, we are going to get the Tokyo CPI. So that's also something that will be happening. Okay, I'm going to go into really quick. Before I do, I just need to mention, if you think that these videos are beneficial to you, you think you get a lot out of them every week, it helps you prepare for your trading week, or if you just like my haircut this week, make sure you give me a thumbs up. Give the team a thumbs up. That's just one thumbs up, really. But it tells our team, thank you very much for putting together this video, doing the research, getting it ready for us every week. We work over the weekends. We work throughout the entire week, and we work on the weekends to make sure that you all are prepared for the following week. This is being filmed on Saturday, just so you know. And also, if there's something that I miss, which I overlook things like, I forgot the Thai baht. Shoot, there might be an interest rate decision this week, or out of India. Whatever I miss, jump in the comments below, because I don't catch everything. Once again, thanks Ben for catching my the ABCD equal leg move on the dollar index. Like I said, I don't catch everything. So if there's something that you see, jump down in the comments below and let us know. All right, but I also want to say, while you're doing all that, check out Forex Analytics. It's only $1 for 10 days. Try it out. Jump in our community. We probably have the most active trading community, and you get to see, what trades I'm in, different opinions. Greg posts his charts before he left on holiday this week. He posts them right at the end of the week. You want to see what trades that I'm in, or what other people are doing? Hey, just go over here to the trades room. You can go and right here and see, oh, look, Blake. Oh, he's in these positions right here. Oh, look, he just added to this, sold that. It doesn't mean you need to do what I do, because I don't expect that, nor should you. But if you respect what I'm doing, or you respect what other traders are doing, and you're like, okay, I wonder why Blake is buying the dollar. Then you can jump over in the general chat room and say, hey, Blake, why are you buying the dollar? Right here. You can say, why are you long the dollar, Blake? And then I'll answer you. That would be me answering myself. But, you get what I'm trying to say. That's the great thing about having a community, is being able to do that. And like I said, this is probably one of the most active communities that you're going to find anywhere. Not only our traders that are in our community, but also our staff that's there. So make sure you check it out. $1 for 10 days, or just join the Trader Funding Program. You'll get into our chat room, because we want you in our chat room, in our community, while you're trying to trade our money. It only makes sense. All right. Okay. Let's go into just some of the indexes. I want to cover those because I think it's important. I want to start off actually with the German DAX, because even though the stock market has been, up at all-time highs, the DAX still had that rejection at all-time highs, and it came off quite aggressively out of this wedge, right? We bounced back because risk bounced back just overall. But the dollar index the DAX is up against some really, really key resistance around the 16,300 level. All right. But it's not just the German DAX that I wanted to look at. I really wanted to look at like the Nikkei. You can see how the Nikkei continues to really come off here after this is you could call this the Warren Buffett breakout point, right? This is even though Berkshire and Warren and all their people, they're probably long down here, but this is where, the majority of the market really started to pick up the Nikkei. So keep in mind, we're probably heading back towards that breakout point. Now we are at the 50 DMA, and I think we do have a flag being developed, which is actually a bull flag, at this point. That doesn't mean it will mature into a bull flag. We could actually reverse, kind of like that the US dollar Japanese yen that I showed you earlier. Very similar type of situation, just going in the opposite direction. But keep an eye on the Nikkei. I mean, the Nikkei still looks relatively strong, but it's relatively strong. We're just coming back down to the breakout point, which I think is going to be very, very important for risk in general. All right. Also, let's take a look at what's happening in the S&P. So as far as the S&P goes, we are at channel resistance. We talked a lot about channel resistance over the course of the last couple of weeks. We overshot the 78% retracement a little bit. We overshot the 161% extension, but that channel resistance continues to kind of cap us. Now, I think whether we break out higher from here or we turn around lower from here is going to have to do with, the simple question, which there's no simple answer at this moment, is, are we going into a recession in the U.S. or aren't we? Because if you go look at when recessions occur in the United States, and then you go back and look at price action, you'll notice that stocks tend to go down whenever we're in a recessionary period. So if we get into a recessionary period and you start hearing the word recession being talked about quite a bit, that we are in a recession, chances are stocks are probably moving lower. So that's what's going to be really key moving forward. Watching the data and seeing how the market responds from here. All right. Also, as far as indices go, the NASDAQ, big rejection of the 161% extension this week. We overshot it. Yeah, we overshot it by a couple of days, but you notice where we closed. We closed below, the week below the 161% extension. And that is a shooting star candle on a weekly chart, which is not bullish on the NASDAQ 100. And we have a lot of big NASDAQ companies, NASDAQ 100 companies, reporting this week, like Microsoft, Google, Meta, Amazon, you name it, right? Also, if you look at the Dow, there's a lot to argue on the Dow. The Dow, broke out. Why did it break out? Because there's money coming out of tech stocks and going into some of the big cap names. I get it. That's why the Dow broke out. But are we at 161% extension? Are we at 127% extension? Are we nearing some really big resistance levels? Or 127% extension of that move. But are we nearing some big resistance levels? I think so. And right now, the money's rotating out of NASDAQ into big cap names. But how about if that musical chair performance stops? Where to next? Right? You should, did the Dow, Russell 2000, lower highs. Notice high, high, high. That's lower, right? There's your triangle consolidation in the Russell 2000. We're up against resistance. You start looking at the bond market and you start thinking, wow, how about if bonds catch a bid and we break above the 200-day moving average? That would suggest that we see a little bit of risk aversion. And you might say, well, hey, Blake, if we get bonds moving higher, yields are going to go down. And if yields go down, won't the dollar go down? Depends why it's happening. If the bond market is moving higher and stocks are moving lower and people are buying bonds because there's risk off, well, that means that the dollar is probably responding well. It's rallying alongside bonds, which is something that we haven't seen in a while. But we haven't seen risk aversion in a while either. Right? Right? Right. Okay, one last thing I wanted to go over. I want to take a real quick look at gold and silver. The reason why I wanted to look at gold and silver, wherever they are. Oh, just a note that, inverted head and shoulder pattern completed, right? Gold, after that dollar meltdown, we should have seen gold, and I know I said this last week, we should have seen gold a lot higher. And it came down as soon as the dollar started to catch a bid. That doesn't surprise me. What will surprise me, and I think a lot of bulls in the gold market would really be surprised if we break back below 1935. We start breaking back below 1935, I think you're going to see a lot of longs liquidate their positions. Have you guys also noticed that Bitcoin is not acting well even after those ETFs were announced? Right? Henry or Finkelstein, Larry Finkelstein. It's actually an inside joke between me and some of my friends that doesn't really pertain to you guys. And look, Larry Fink, yes, he made a lot of money here, but isn't it interesting how institutions are not following right now? Take a look at Ethereum. Ethereum's struggling to get a move on. How about if we get back below the 50 DMA? What happens there? Do we see the 200 DMA again? There's a lot of things that should be happening that aren't happening in the markets. And there's a lot of things that are shifting in the markets that we need to be aware of. And hopefully this week ahead video has kind of gotten you there and given you a better understanding. Boy, this video is a long one, but we have a big week. So I want to thank you all for hanging out with me this long and spending your time with me, because I know your time is important. So thank you very much. I really appreciate each and every one of you. I'll see you on the Monday morning F.A.C.E show. Talk to you later. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.